It is live, madam.
Okay. Good evening,
I
and
am not
please
seeing.
welcome.
I am not.
Sir,
Sorry. I am not seeing in my screen. It is pre-live.
No, it's live, sir. It is live.
it is like sir.
It's live,
Okay,
sir.
then.
It is live.
Good evening,
Okay.
and welcome to the webinar organized by the Banking, Financial Services and Insurance Board. It's on Prevention of Money Laundering Act. It's the first webinar on the series, which will be held consecutively. As we know that money laundering is a cross-border activity and it has impacts on economic and political stability of the country. So before we start this webinar, we would like to play the Institute anthem. I would like to introduce the chairman of the BFSI board, CME Chittaranjan Chatterjee. CME Chittaranjan Chattopadhyay is a fellow member of ICMAI, an associate member of Indian Institute of Banking and Finance, holding qualification from CIPFA London as Chartered Public Finance Accountant. He has 38 years of experience of working in commercial banks in different capacities. He has brought out several publications on banking for ICMAI, which include 3 editions on risk-based internal audit of commercial banks, guidance note on a concurrent audit of commercial banks, internal audit of treasury functions of commercial banks, 8 memoir on lending to MSME sector, and 8 memoir on infrastructure financing. At present, he is Central Council member of ICMEI and chairman of Banking, Financial Services and Insurance Board and chairman of Internal Auditing and Assurance Standards Board. He is also member of SAFA NPO and Cooperative Committee. Sir, we would welcome you to the webinar. So please, can you give your words?
Thank you, Payal. Very good afternoon to you all. And this is a very, another series of webinars we are initiated. Very good evening and welcome to this webinar on the pertinent topic of Prevention of Money Laundering Act Series 1, organized by the Banking, Financial Service and Insurance Board of the Institute of Cost Accountants of India. I want to express my profound gratitude to CMA Siniji Dalwadi, the President of ICMI, and all my council colleagues, including BFSI board members, students and other stakeholders of the Institute, for their untiring support and encouragement to the BFSI board. I am thankful to CMA Dr. P. Sivarama Prasad, former AGM SBI, for being the resource person of the BFSIB and speaker of this webinar. Friends, this is a very learning session for all of us because as you know, this BFSI board is conducting this 3-part series of webinars for the important topic of PMLA, including KYC. We will delve on the Money Laundering Act and allied acts, along with suspicious transactions, case studies, along with various penal provisions as per IPC, FEMA, black money and other provisions issued by the various regulators like SRO, SFIO, RBI, IRDI, and SEBI from time to time. Friends, the 6-hour session will also cover the understanding of the risk-based customer due diligence, FATF, and FIU as per the Basel recommendations. It will delve deep in the money laundering risk in the BFSI sector and reporting mechanism of such fraudulent activities and the role of adjudicating bodies for such risk mitigation and resolution. Friends, we know as well that money laundering has various connotations like formation of shell companies, including trusts, fake invoicing, and round tripping. Banks and financial institutions play a pivotal role for detecting suspicious financial transactions and preventing financial crime. The technological help is essential for creating a dashboard for creation of spatial compliance platforms through use of big data analytics, financial institutions, by which it can easily research their customers and ensure that they are not doing business with any unscrupulous individuals. The recent notification under the PMLA 2002 Act has, obligated CMS for carrying out various financial transactions. The recent notification under this PMLA Act, in fact, it has obligated CMS for carrying out various financial transactions on behalf of their clients as reporting entity. So the objectives of the webinar is to handhold the CMS on how to identify, track, and record suspicious transactions for their clients or on behalf of their employer. CMS have the requisite capabilities to deploy necessary tools and techniques which are sufficiently robust, dynamic, and aligned to the risk profile of the client. The BFSI board, in its objective of knowledge sharing, are publishing various articles in their quarterly e-journal called the BFSI Chronicle. It contains various articles on PMLA and allied areas. In fact, in our last annual issue, which is the 14th volume and the 3rd annual issue, you will be having on many articles on this PMLA. We have also published the risk-based internal audit of banks and other relevant publications which are required to be understood deep of the financial system. We are conducting numerous webinars and seminars so that the stakeholders get benefited in the best possible manner. We are researching the latest professional opportunities to serve our profession, our nation. We request your suggestions and please mail us to bfsi@icma.in for more such thought-provoking topics necessary for enhanced knowledge in pertinent areas required for all professionals. I hope that you will have value additions from this webinar and the remaining 2 webinars which will be deliberated by the same faculty. This would be the first series, second series, and third series will be there. And I request all my esteemed participants here to come out with their suggestions. Not only suggestions, I just want to mention them that they should be proactively advising our BFSI board. And let me tell you, we are doing our best and we are leaving no stone unturned for the cause of the professional visibility in the BFSI sector. And I request you to be with us in future. I'm sure we'll be getting our continuous, I will be getting your continuous support. And with your support, I'm sure we shall be traversing a very successful journey in our days to come. Thank you all for attending the webinar. We wish you a very happy learning. Thank you.
So thank you for the speech, sir. It is always a pleasure to hear from you. Now I would like to introduce CMA Dr. P. Siva Rama Prasad, who is former AGM of State Bank of India and Faculty of Banking, Financial Services and Insurance Board. He is a qualified professional in cost accountancy, company secretary, finance, commerce, insurance, and banking, with experience of 36 years in banking and financial services, with cross-cultural experience and good knowledge in insurance sector. He is a fellow member of ICSI, the Indian Institute of Banking and Finance, Insurance Institute of India, and the Institute of Cost Accountants of India. He is former AGM and now he is faculty and resource person of BFSI board. Sir, I would request you to start your deliberations.
Okay. Thank you very much, madam. First of all, thanks to the BFSI board for giving me an opportunity to discuss about the Prevention of Money Laundering Act 2002. But PMLA amendments were also made recently, that is in 2023. Today, if you see in India, number of cases are filed under PMLA. And on account of this act, if it have any negligence or casual approaches there, the professionals are also involved in the number of cases. To avert or to mitigate that type of risk by the professionals, they should know A to Z of the PMLA Act, particularly the practical point of view. So now, series 1 or 2 or 3, I will discuss the nuts and the bolts of the PML Act 2002 and whatever the amendments are made 2023, that too how the professions affect on account of a PML Act, if at all they are negligent or casual approach, etc. So actually, whatever the money is there, finally the money is enrouted through the banking system or financial institutions. So whatever the irregular or unauthorized money, if at all it is routed through the banking system, definitely it will be they may catch hold of the unauthorized transactions through various sources. Now I will discuss about the introduction part. Later on, I will discuss about the PMLA. Later on, FIUIND, Financial Intelligence India, Unit India. After that, I will discuss about what are the various linkages are there to identify the irregular transactions. It is very easy to find out. Today, in your account, whatever the transactions that are happened in the night after the end of the day, particularly the 8 o'clock or so, the banking system as a whole, the data will be transmitted to the FIUIND through suspicious transaction report. Now, I will discuss about the various aspects in detail and that to practical point of view, not a theoretical point of view. Miosame Olcott rightly quoted, money is the root cause of all evil. Money, 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 money. Some of the people, they are ambitious. They are always thinking how to earn money, how to earn money. In that process, they are going to start or committed some mistakes. That's why in a country like India, no stranger, several high-profile cases of money laundering cases are there. If you see the history, number of cases are there. Because everybody, some of the people, they want easy money. And their life, they want to spend the money in a different manner. In this era, everybody is a rat race to earn more and more money. Because the law of diminishing marginal utility is there in the economics. Once one apple are given, he is taking that apple in a hungry manner and the taste and all the he will like whoever is giving the apple. If at all the same person is given second apple, then the first satisfaction will deteriorate. Third apple further deteriorated. Fourth apple, I don't like to eat more apple. But in the case of money, that is not the case. If at all you are giving 1 crore to me, I'm happy. Another crore, I am further happy. Another crore, further happy. That's why money, money, money. Some of the people mind the concept is how to earn more money, how to become the wealthier person now. And in that process, they are not following the guidelines. They are not. Ethical money is very, very important. Unethical money is not a fire. Why we have some individuals use ethical and illegal money? Okay, if at all I'm doing work, I'm getting some money, I have to show that whatever the income tax returns, whatever my business returns are there, I want to show. Some other people, they want to, they don't want to show the whatever the money they are earned, particularly the illegal money. And to earn money, there are some who resort to unethical and illegal activities for financial gain. Some people are always, they want to earn ethical money only. Some people, they want to always how to earn the unethical money. Increase in the cases year-on-year basis, unethical money. If at all unethical money, the mindset is there, definitely the number of cases will also increase. Even public knows illegal or money or illegal activities unethical. Still they are doing, some people. Some people they are not stopped that particular process. Unethical money or unethical activities. That's why the number of cases are increasing year-on-year basis, particularly in the business world, as well as the individuals also. So if you see the history, number of cases are filed, a number of scams are there. Commonwealth Games, it was happened in 2010, 70,000 crores. And Sharda Group financial scandal in 2013, 2,500 crores. And the Indian coal allocation scam or Colgate scam, that is 2012-13, 1,85,591 crores. And the 2G scam in 2008, it was happened 1,76,000 crores. And the Kingfisher, everybody knows about the recent happening, that is Kingfisher Airlines 2007-2017, during that period, scandal period, 9,900 crores. And the Satyam scam, Satyam Computers scam, 2009, 7,000 crores. And the Punjab National Bank, everybody knows about the Nirav Modi and others. The year of scandal, 2007 to 2017, 11,400 to 13,500 crores. And the ABC Shipyard, that is in 2012 to 2017, they did a fraud of 22,842 crores. Not this one, idea, ICICI Bank, Chandra Kochar, Videocon scam. But that is the case. 2016 to 2022, 1,875 crores. Not only that one, Yes Bank, DHFL case. 2007 to 2017, 5,050 crores. And all these things, a lot of the money. That too, most of the money is public money. Public money. If at all the money, the fraud was big, fraud was happened in Punjab National Bank, that is a depositors funds, not the Punjab National Bank funds. Banks are only the intermediary. The biggest money laundering cases in India that make headline 2022, the National Herald case, the sand mining case, Jharkhand mining case, School Service Commission recruitment scam, and Chinese visa case, and Patra Chawal scam is also there, Nawab Malik and Dawood Ibrahim scam. and Jammu and Kashmir Cricket Association fund scam, and Chidambaram versus Director of Enforcement in 2019, and the Union of India, and Hassan Ali Khan and others 2011. And if at all you are talking about all these things, the number is increasing. More number of small cases are also there. Particularly the Enforcement Directorate attaches over 5,000 crore, 5 crores assets in online betting, gambling, linked money laundering cases. We are not talking about the high amount scams. With small amounts are also there. That's why, as a professionals, we should be very careful whenever we are providing services to our clients. Because as per Money Laundering Act, 1 crore and above transaction, not 10,000 crores or 5,000 crores or 20,000 crores, 1,000 crores and above. If that is a money laundering case is happened, then the Enforcement Directorate will book a case against that culprits. Though the Enforcement Directorate attaches over 5 crores assets online betting, gambling linked to money laundering case. That is recently happened. That is Saturday, August 6, 2023. That is New Delhi PTI information. Not only that one, under PMLA, Prevention of Money Laundering Commission, any offense as well as mentioned in Part A and Part C. If at all you want, what are the areas comes under the purview of the money laundering? Only Part A and Part C list. You see the list. Particularly, that is a schedule of a PMLA will attract the provisions of the PMLA. Whatever the activities, whatever the irregular activities, whatever the irregular money that is sourced by any person that is covered under Part A and Part C schedule of a PMLA will attract the PMLA provisions. So before being a professional, we should be masterized that Part A and Part C schedule of the Prevention of Money Laundering Act. Not only that one, some other acts, offences which may attract PMLA also. Some attract, some because once Prevention of Money Laundering Act is there, this Part A enlist offences under various acts. I am quoting here only the few acts, not all acts. Indian Penal Code, Narcotics, Drug and Psychotherapeutic Substances, and the Prevention of Corruption Act, Antiquities Act, Treasury Act, Copyright Act, Trademark Act, Wildlife Protection Act, and the Information Technology Act. Whatever the few is there, I am quoting here, not all. So they will book under these whatever the wrong transactions are there under these acts. It will be covered under the Part A, and it is comes under the purview of the Prevention of Money Laundering Act. Part B specifies how much amount. I told about we should not think about the Kingfisher. We should not think about the Videocon scam like that. Only 1 crore and more transactions. If at all any fraudulent transactions are there, unethical manner is there, that is covered under the Prevention of Money Laundering Act. The amount is 1 crore and more. That is specified in the PMLA Act. That is a Part B specifies the offences that are there under Part A. That is 1 crore and above is sufficient. Not 10 crores or 100 crores like that. That's why the number of cases are increasing in the Prevention of Money Laundering Act. Part C, Part A, Part B, amount, Part C is cross borders. Particularly the transaction border crimes reflected and the dedication tackle the money laundering. If you see the Part C, what are the cross-border transactions? Irregular transactions are there, unethical transactions are there, all are covered under this Part C of the PMLA Act. Do you know 3,110 money laundering cases and 12,000 FEMA cases registered with the Enforcement Directorate? Only for the last 3 years, the total is 15,110. 15,000 110 cases are booked by the enforcement directorate within a short span of time, that is 3 years, by the Indian government. The government of India Parliament, this was informed to the government, the Parliament also on 31st July. So that's why we should be careful. Being a professional, whatever is, we are verifying, authenticated, all transactions are properly handled or not. If at all it is not properly handled and unethical manner, irregular manner, then automatically this enforcement directive will catch hold of those people because it is very, very, very easy to cross-check the transactions because now all transactions are routed through the technology. The wire transactions are increasing. The wire transactions are increasing. My account to your account or your account to another account or another account. It is very easy to look at it today because on account of technology development, on account of structured query language, on account of the software development that are happening. Earlier, in the manual system, this type of system, it is very difficult. Today, it is very, very easy to find out the culprits who are doing this prevention of money laundering transactions. Enforcement directive recorded cases on the basis of a risk-based robust mechanism. Suppose once the enforcement directory leave it like that, the risk of the country will increase. Money laundering transaction is a bad or evil to the country development. Some of the countries are struggled on account of non-implementation of the proper money laundering acts. Under the Prevention of Money Laundering Act 2002 or the FEMA Act, today the two important acts, every professional should be masterized. The two important acts is one is PMLA, second one is the FEMA Act. One is the 2002 Act and second one is the 1999 Act. The number of cases under the PMLA, 2021, 981 cases. I'm talking about PMLA, not under FEMA. During 2021, 1,180. After that, 949 cases during. Still, more number of cases are registered by the enforcement director. Even enforcement director recruitment is also happening because the volumes are increasing. Similarly, in federal agencies book, different agencies that are organized by the government of India, that is called federal agencies. I will list out the federal agencies also. 2,747 cases in FEMA during 2021. And 5,331 during 2021-22, and 4,173 cases in 2022-23. So total is 12,233 FEMA cases were registered by the enforcement directive. Why? Because it is an illegal transaction, not legalized transaction. In the last 3 years, this much cases are booked under the foreign exchange transaction, under the cross-border currency and the transactions. If you talk about the federal agencies of the government of India, CBI is the Minister of Commerce and Industry, and the Director of Revenue and Intelligence, Defense Research and Development Organization, Central Industrial Security Force, or National Investigation Agency, Department of Economic Affairs, Bureau of Industry and Indian Standards, and the Department of Atomic Energy, and the Department of Revenue, and the Central Reserve Police Force, and the Ex-Servicemen Welfare, and the Department of Telecommunication, and the DGFT, Director General of Foreign Trade, under the Ministry of Commerce. All these federal agencies are booked in different directions. Unethical money that is catch hold of by them, those who are doing the unethical money transactions. Now coming to the subject, that is the Prevention of Money Laundering Act. The Prevention of Money Laundering Act is 2002, nearly 21 years completed. Now, if you see that for the last 3 or 4 years, the PMLA Act, because every day if you read the newspaper Under PML Act, the Enforcement Directory booked this case. Under PML Act, Enforcement Directory is booked this case like that. The Prevention of Money Laundering Act is recorded an act of to prevent money laundering. Whatever the money laundering activities are there, that is to be prevented. But in the banking also, the AML, Anti-Money Laundering Act. Banks are also following certain guidelines, anti-money laundering. Money laundering ought to be, but the act is a Prevention of a Money Laundering Act. It also provides seizure of the property that is derived from or involved in any money. If at all the ED, Enforcement Directorate, understand this is unauthorized money, then they can seize the whatever the properties of the culprit who did that particular wrong transactions. It considers a criminal offense. Whatever the PMLA transactions are there, 1 crore and above, whatever the irregular transactions or unethical transactions, then it is called a criminal offense. And the Prevention of Money Laundering Act, not only for the companies, it is for individuals, it is for companies, it is for partnership, LLP, etc. Societies are there. Trusts are also there. Trusts, all these are covered under the PML Act. It is not for corporates. It is not for individuals. Money laundering has become a serious problem in the recent years. If you see the last 3 years, daily one incident, sometimes 2 or 3 incidents. Enforcement Directorate, they attached this property. Enforcement Directorate, they put up in jail that particular person like that. Criminals use money laundering to hide their unlawful funds. It is not a lawful funds. Once it is a lawful funds, it should be shown in the tax returns, whether it is a company tax return or individual or the trustees or LLPs or the societies or the trusts, because they have not shown. They swallowed the money. That is a not ethical money. It is an unethical money. That amount is more than 1 crore. The process of laundering money typically involves 3 steps. Any money laundering activity is 3 steps. One is placement. Second one is layering. Third one is integration. So if you see these 3 angles, the Enforcement Directive will study. The 3 steps that are there in money laundering everywhere across the world, that is 3 steps. One is a placement, second one is layering, third one is integration. So in these 3 directions only, angles only, the Enforcement Directive will study how the funds are placed, how the funds are turned into a good one, and how they are coming into the integration, particularly in the limelight, black money convert into the white money. Placement. The placement is secretly injects the dirty money into the legitimate financial system, whether through banks or through stock market or whatever the various modes are there. The placement secretly injects the dirty money into the legitimate financial system. It is not a good money. It is not a legitimate money. So legitimate money, if at all I put in banking system or the stock market, then nobody will object, even Enforcement Directive. But it is a illegal money. So this dirty money, legitimate, that is called placement. After that, layering consists of the source of money through series of transactions. Series of transactions, they split that amount into series of transactions and they will place in different and bookkeeping tricks. Particularly this is happening in the corporate world. Whatever the illegal money is there, they are layering through the bookkeeping tricks. The bookkeeping tricks, that's why today, what is a suspicious transaction? We will discuss in 3rd series what are the list of the suspicious transactions. If at all if at all it is covered, not covered under 3 series, we will extend 4 or 5 also, because I want to disseminate that information to all the participants who are interested to learn about the PMLA. Integration. In the final step, integration. Now the laundered money is withdrawn from legitimate account, as if it is a good money. Even though it is a bad money, they are using the financial system, convert the bad money into good money. Whatever the purpose of the criminals they have in mind, then that money they will use for various illegal activities. To disturb the economy, using obtained series of criminal offences such as terrorism. Some of the countries, whatever the laundered money is, the money laundering transactions are there, they are using for terrorism and drug trading. Today, drug trading is very, very serious. It not only spoils the health of the people, it decreases the productivity of the economy. The people, if at all they accustomed or they are habituated to take, then it is serious. The productivity people of the country, the strength of the country will deteriorate. Hence, money laundering considered a wrongful thing. It is not a rightful thing. It is a wrongful thing. It not only affects the social and economic stability in the country, but also tends to indulge serious criminal offences. Particularly on account of this drug trading or terrorism, it creates a lot of a problem to the country. Uncontrollable. Law and order situation will become worst. And sometimes government is unable to control the state also. So tends to indulge a series of criminal offences. That is happening. Not only that one, India witnessing terrorism and drug trading for the long time. Even though PMLA Act is there, even though control systems are there, even though risk mitigation systems are there, still we are facing. But to a large extent, on account of PMLA guidelines, it is reduced to a large extent. Had it not been there, the PMLA Act 2002 is not there, then automatically imagine the situation of the country. Criminals use it to hide the money for unlawful laundering. Now coming to recently, the government of India has also amended PMLA rules to further expand the scope of the money laundering. If you see the 2023, because they want to strengthen the system. If at all 2002 to 2023, 21 years completed, still some shortfalls are there, some drawbacks are there, some pitfalls are, all these things are addressed to some extent in PMLA amendments 2023. Strengthen the regulations, whatever the regulations are there by the government of India, and increase the scrutiny. Today, every transaction has to be scrutinized. Shell companies are increased. If you see the 4 years back, Minister of Corporate Affairs, they sent one communication to the Reserve Bank of India. As per their data, nearly 60,000 plus shell companies are there in India. Then the RBI instructed all the banks verify the current accounts where business activity is not there, and they are rotating the money in crores of rupees. Even I am also one of the person to verify the accounts. Some of the companies' names are there registered under ROC, but they are located in 2 BHK or 3 bedroom portion in apartments, only both. But crores of transactions are there, no production, no services. And this type of shell companies are increasing, and nearly 40,000 identified and informed to the Minister of Corporate Affairs also. They have taken, going to take the action against those companies. Strengthen the regulation, increase the scrutiny. Scrutiny is very, very important. Today, on account of technology, the scrutiny is somewhat easy when compared to the manual system. And particularly, all money is to be routed through the banks or financial system. All money, whatever the money is, at the end, if at all other than cash transactions, all money is to be routed through the banking system only. Suppose if at all you are going to transfer, you have to transfer from your account to my account to another account. All are through the banking system only. So that's why the KYC is very, very important. Even as a professional, your client, know your client. KYC means in the banking parlance, know your customer. In case of our professionals, know your client, whether it's a good client or bad client. Even banks are also, whatever their customers are there, they will be classified into 3: low risk customers, the medium risk customers, high risk customers. Most of the people, they may not aware whether the banks are, suppose one cine actor is there. Whenever he is going to open an account with the bank, they will invite, they will garland, they will give the bouquet and all these things, and they offer whatever the this one is there. They will offer the good seat and the drinks and all these things, and they take the photograph. But that customer is a high risk customer because his tangible net worth is more as per the RBI guidelines. Even though we are inviting, we are taking photographs and all these things, and we are giving publicity also. But that customer is a high risk customer based on the tangible net worth of the customer. Take for example, politically exposed persons, whether MLA or MP or their relatives, once they are coming to the, oh, he is MLA, he is MP, or he is relatives of MP, but Reserve Bank told they should be classified as a high risk customer. We are giving a bouquet, we are giving garland, and we are taking photos and all these things. But that person, politically exposed person, and their relatives are to be treated as a high risk customers. That's why all banks and financial institutions, they have to classify the customers low risk, medium risk, high risk. What is the classification? Because you should know all these things. You should know all these things. And KYC PML, that is Anti-Money Laundering Act, that is a Prevention of Money Laundering Act, including the 4 key elements. The Reserve Bank of India instructed all the banks, because of all the money to be routed through the banking system only, whether it is a transaction or cash transactions. First one is the customer acceptance. Who's the customers you have to accept? Under what basis you have to accept? What type of documents you have to take? All are enlightened. They all are mentioned by the Reserve Bank of India, and that is circulated to the banking sector. This is not only the banking, financial system I am talking, whether it is insurance or the capital market or money market or whatever the commodities market is there. So the customer acceptance policy, they have specified whenever the customer is coming to the branch to open an account, don't be hurry. You have to follow these guidelines. You have to obtain this one. You have to obtain these originals. So here customer identification is very, very important. Second one is the customer identification. Once acceptance, identification, certain documents are there, and whatever your transactions are there in the core banking system, KYC, AML software is also there. So each and every account, it will be verified. Any suspicious transactions are there, it goes to the suspicious transaction report. And that reports are to be verified, and that is to be informed to FIUIND on everyday banking as a whole. Then they will verify and they will do the data analytics and the data mining and they will find out who are doing what type of transactions, how much turnover, all these data is available to the FIUIND, Financial Intelligence Unit, Government of India, IND, and monitoring the transaction. The banks are also monitoring the transaction. At the same time, the data will be transmitted to FIUIND. FIUIND is also lot of the intelligence is there, particularly how the data is, what type of transactions he is doing, what is his capacity, what is the bank's, as per bank's information, what is his profile of this. And the banks are also risk management processes. If at all any irregular transactions are there, the alerts will give by the banking system, because lakhs, crores transactions are happening through internet banking, through mobile banking or corporate internet banking, cash transactions, wire transactions, country to country transactions, all are happening. For that, in the banking system also, this type of software is also there. Customer risk. So the customer is a risk one, whether he is a low risk customer or medium risk customer or high risk customer. Customers are to be classified by 3 categories. Every bank, irrespective of the customer. In the present, question refers to the money laundering and the terrorist funding risk associated with a particular customer. If at all I am opening an account, then the bank will verify who is Mr. Prasad, what is his profession, what is his annual income. All things they will verify, and accordingly they will classify me whether I am a low risk or medium risk or high risk customer. This risk based on the risk perception associated with the customer profile. Only 1 minute, sir. Only 1 minute, sir. Hello. ఈ టవర్ ఆపోజిట్ హౌస్ లో ఇచ్చేసి కవర్ నేను బయట ఉన్నా. It's a risk-based perception associated with the customer profile and a level of risk associated with the product channels to be used by the customers. All bank products are there, whether it is a savings bank or current account or recurring deposit account or fixed deposits or loan account, all are product. Even lockers is also one product. Some of the customers, they are putting the cash in the lockers also. But for that also some guidelines are there. So the customer profile is very, very important. Suppose one rickshaw wala is opening an account. We will take the whatever the Aadhaar card and other things are there, and we will put that customer as a low risk customer based on his income, based on the transactions, all these things. In that account, no foreign transactions are allowed by the system. Like that, the product channels today. The channels is very increasing. One is the branch. The primary channel for banking is the branch, and alternate delivery channels are there, either through CDM, cash deposit machine, or ATM, or internet banking, or mobile banking. So many other channels are also there. Through various channels, the funds are coming and the funds are also withdrawing. So based on that, the transactions also, we will classify the customer whether it's a low or medium or high. Categorization of customer. The customers are classified as a low risk customer, medium risk customer, high risk customer. Parameters are considered. What parameters for low or medium or high? Customer identity, customer social status, customer financial status, nature of the business activity of the customer, and information about the client's business, and the location of the customer business is also one of the important criteria. This is defined by the Reserve Bank of India to all the banking sector in India. Now coming to low risk customers. I'm giving a brief, but the details are available in the regulators' websites also. Low risk customer. This customer is called a level 1 customers. Individuals other than high net worth individuals, and entities whose entities source of income can easily be identified. Once I am opening an account, if I am able to identify that customer income, how he is getting that income, it is easy. Then I will naturally be classified that customer as a low risk customer. Transaction whose account by and large confirm the known profile. Suppose one salaried person is there. Every month he is getting 40,000 and he is working in a government organization, and the employer certificate is there, or the Aadhaar is there, or PAN card is there, or identity proof, the ID card of the government staff, all are, then definitely I will open that account as a low risk customer. But if at all that a particular person is doing some wrong things, bribing and all these things, and they routed that amount through his account, then the system will take care of. I need not worry. System will take care of. If at all suspicious transactions are there, suspicious transaction, the system will classify into the transactions are to be classified into STR report, and straight away it goes to the FIU IND on daily basis. Maybe categorize the low risk customers such as salaried employees, people belong to low economic strata of the society, government departments, government-owned companies, regulator and statutory bodies. These are no risk to the bank. That's why whenever I am classifying the customer in the computer system, one drop-down menu is there: high, medium, low. I will put low. For the above category, KYC requiring proper identification and verification of address proof would suffice. I need not go through in detail about that particular customer. Whatever this one is, that is suffice for me. Medium risk customers. These customers are level 2 customers. One is a low risk customer, level 1 customer. This is why the customer categorization to be understood by you is all money is finally routed through the banking or financial system. Customers are likely to pose higher than average risk. So the bank should be categorized as a medium or high risk customer. These are medium or high risk customer. Categorized as a medium or other than low risk customers, so we are classifying either medium or high risk. But for this category, higher due diligence is required. Whenever we are opening the medium risk customers, the due diligence, while opening the account, the due diligence, earlier this is not there. Now, particularly the shell companies, opening of shell companies today, it is impracticable, impossible on account of the PMLA amendments 2023. I'm talking about 2023, not earlier. And the customer background, nature, location, activity, country of origin, source of funds, his or her client profile, etc. based on the proper identification. We will do higher due diligence. Particularly 2 years or 3 years, 2 years back or 3 years back, the Reserve Bank told, if at all any current account borrower is having a loan account, particularly the working capital, daily transactions are to be routed through working capital loan. And at the same time, borrower is having the current account, close the current account. Transactions are to be routed through the loan account only, not 2 accounts. Over a period of time, all the branches, whatever the current accounts are there, all are closed. And we request the customer, if at all you have not closed, then Reserve Bank of India will impose the penalty of 75,000 like that per account. So that's why the banks are also on war footing basis. They will go to that particular wing, the unit, and verify that one and confirm it to the Reserve Bank of India. These are the correct accounts. These are the suspicious account like that. So here, higher due diligence is required, particularly the medium risk customers. Particularly the medium customers like gas dealers, medium risk. They are not low. Car, boat, plane dealers, electronic wholesalers, particularly mobile wala or the TV, all the washing machines. That if that is open, it is a medium risk customer. Travel agencies, medium risk customer, telemarketers, online marketers, particularly various online marketing today, online marketing, even Amazon also. And the telecommunication services provided like Airtel or Jio, all accounts, whenever we are opening, it is a medium risk customer. And the pawn shops or auctioneers, they are also medium risk customer. And the restaurants, retail shops, movie theaters, all are the medium risk customer. Sole practitioners and notaries and the accountants, all are classified. Even practitioners, professionals also. Well, now, as per RBI guidelines, it is a medium risk customers. Not only that one, blind persons. If it are any blind person wishes to open an account, readily we will open the account. But the categorization wise, we will put it as a medium risk customer. Not only this one, Pardhanishan women, particularly some religious people, if at all they are putting the Pardhanishan woman, then the Reserve Bank of India clearly told we have to categorize it as a medium risk customer. High risk customers. The customers are called level 3 customers. Level 3 customers. For this category, higher due diligence is required when compared to low or medium. Further high is required includes customer background, the nature and the location of activity, the country of origin, the sources of funds, his client profile, and besides a proper identification is also very much required while opening, because shortly they are going to route their whatever the money transactions are there. And bank shall subject such accounts to enhanced monitoring on ongoing basis. Particularly for high risk customer, the Reserve Bank of India told clearly and categorically monitor the transaction. What type of transactions are doing? They are doing. If it is a suspicious transaction, please inform to the FIUIND. Anyhow, that system is take care of. We need not bother, and all suspicious ST or report will be generated bank as a whole, and that report goes to the FIUIND on daily basis. For this high risk customer, trust account, interest accounts. Because the Reserve Bank of India clearly told, whenever you are opening the trust accounts, be careful, be careful. And they have given the guidelines also. Charities, non-governmental organizations, and who are receiving the donations. And the companies having close family shareholdings or beneficial ownership, that is also the high risk customer. Firms with the sleeping partners. If at all sleeping partner is there and they are not actively involved in the business, for those customers also, that is a high risk customer. And the accounts under Foreign Contribution Act, recently the Foreign Contribution Act, I will cover the FCRA Act in this area also. Today, earlier, lot of people, particularly they are getting donations from the other countries for development of their religious things. And today, FCRA accounts, opening an FCRA account is also to be opened at a centralized the State Bank of India, Parliament House State, Parliament State branch, and a daily dashboard. The Minister of Home Affairs, they will view how much inflow of foreign currency is happening to that particular account and how they are utilizing. They are also given certain guidelines. If any wrong things are there, definitely these people will also come under the purview of the PMLA Act. And here, accounts under foreign currency. Only 1 minute, sir. Hello. Yeah, then you Japan. Meeting. Next, customers of close relatives, PEP transactions, particularly political exposed persons. Customers who are close relatives of PEP transactions and accounts which PEP is the ultimate beneficiary owner are politically exposed person. Today, whenever we are opening an account, particularly the MLA or MP or particularly the municipal the councillors or Gram Panchayat, Sarpanch, all are politically exposed person. Or if at all any particular political party people are also there, that is also covers under this one. And those dubious reputation as per the public information about some people, reputation, but that reputation is not on account of their efforts. They will they will manipulate and they will become the reputation. Those persons account also we will open, and it is a high risk customer. And non face-to-face customers. Non face-to-face customers is also high risk. Today, NRIs, if they are opening account, they will send the application, they don't come to the branch. Or online opening, these people are called a non face-to-face customer. Non face-to-face customer, we will classify as a high risk customer. And non-resident customers, NRIs, there are also categorized as a high risk customer. And the account of cash intensive businesses, some businesses cash intensive business, those customers, if cash transactions are more, not online transactions, then those customer accounts that particular the customer accounts we will classify as a high risk customer, particularly such as bullion dealers, including sub dealers and jewelers. These people are also jewelry account means high risk customer. Bullion dealers means high risk customer, and cash high intensive business people high risk customer. Automatically we will open the account. Most of the people they may not have that the banks are categorized the customer into low, medium and high risk customers. Parameters for defining net worth, high net worth individuals. Once a high net worth individual is there, definitely he is a high risk customer. For that also, the Reserve Bank of India given directions. Average balance of 100 lakhs and above in all deposits. Put together savings, current and term deposit, put together it will be more than 1 crore, then you will be treated as a high net worth individual. High net worth individual to be treated as a high risk customer. That is the category 3. Enjoy the fund based or non-fund based or term exceeding 100 lakhs. If at all any person is taking a loan from the bank more than 100 lakhs, then that customer is to be categorized as a high risk customers. And particularly the account type. All accounts are to be savings or current account or fixed deposit. If it is 100 lakhs and above, high risk. 25 lakhs, 200, below 100 lakhs, medium risk, and less than 25 lakhs deposits or whatever it is, deposits are there. Those people are called low risk customer. So here, based on these amounts, based on the categorization, the system will scanning the transactions on day-to-day basis with the help of a software. And the system will generate one report. That report is called suspicious transaction report. That name is called STR report. That STR report, bank as a whole, it goes to the Financial Intelligence Unit, that is IND, India. Categorization of customer shall be particularly be based on all accounts linked to customer ID. Some of the customers, they are thinking that they are opening different accounts, but PAN is common, mobile is common, or email is common, or if at all Aadhaar card is common. So once I map by opening the second account, then automatic system will give alert. This customer is already having another account. You open under that ID, not separate account, separate ID. Whenever you are opening an account, the bank will give one ID. Under that ID only, the savings, the current account, the fixed deposit, the home loan, the car loan, all will be reflected under ID, but with the different account numbers. So thereby the system will identify the suspicious transactions. So irrespective of the constitution, like a joint account or partnership accounts linked to the customer ID where customer do not have any stake in business activity did not be clubbed. Suppose one customer is not having any stake, you should not link that one. But otherwise, for illustrative, list of parameters considered, high risk such as unusual transaction behavior. Suppose every month I'm going to get 40,000 salary. If every month in my account 4 lakhs, or within a month 10 lakhs is there or 20 lakhs is there, suspicious transaction. It will be reflected in that suspicious transaction. And submitted suspicious transaction for customers and submitted cash transaction report. And for all customers, based on their transactions 10 lakhs and above cash transaction, automatically CTR report will be generated. Cash transaction report that goes to the income tax department. Cash transaction report and it will be reflected in AS 26 AS and it will be reflected in the IDR report also. So the cash transaction report, particularly more than 10 lakhs, automatically the system will capture and it goes to the respective regulatory authorities. Frequent check bounces or returns. Some customers, they are giving checks and these checks are bounced, and the bounce means that bouncing of checks. If it all even a check returns are also the system will. I need not manual intervention is no more in most of the activities in the banking. If clearing, I present in the clearing, if a check is bounced, automatically it goes to the particular check returns bounced. So here, if it of some customers, particularly high risk customers, if frequent check bounces are there, then that customer will be automatically the system will be classified as a high risk customer. All customer profiles, accounts, NRIs, high net worth individuals, politically exposed persons, NGOs, trust, cooperative society, Hindu undivided family, exporters, importers, accounts having beneficially ownership invariably categorized high risk. Even in these accounts, if a low amount is there, below 25 lakhs is there, or 1 lakh is there, by default, the system will classify as a high risk. Whether it's a undivided family or exporters or importers, irrespective of the low risk category, allotted under the parameters. And in the matrix like a customer profession, type and product code, account status, account vintage and balance accounts. All these things customer will be directly classified as the high risk customer. Why I am told about the before PMLA, particularly if at all I am going to the suspicious transactions and other, how we are going to verify the client's profile and all these things. But these are the basic guidelines for you also being a professional. Whenever you are going to take up new clients or existing clients, some parameters are to be observed. Simply business is one criteria. At the same time, client genuineness of the client is also another important criteria. If at all I am not screened the know your client KYC. KYC is for banks, know your customer. For professionals, KYC is also there. That is know your client. Once, if at all any mistake or negligence is there, then automatically, even though we are honest, we are also involved in that particular cases. Blocked accounts, unclaimed deposits to be categorized as high risk. Some income tax, some GST or earlier the VAT and other regulators. Whenever the taxes are not paid, they are court cases. Then automatically they will give the direction to block the account. The block, once I block the account, automatically the account will be turned into high risk customer and it is going to that particular the suspicious transaction report. Unclaimed deposits. Some of the people 20 lakhs, 30 lakhs, 40 lakhs account amounts are there, but that amount is lying in the account. Nobody is withdrawing, and a year-on-year basis interest is created. But as it is a suspicious transaction. Why 60 lakhs is credited to the account and not withdrawn. Earlier, some of the people, they used to take a huge amount of demand drafts, not in cash. Some of the people earlier, before the technology development, traveler's checks are there. They purchase and retain the traveler's checks, cash in the form of traveler's checks. So that type of laundering activities, some people are doing. That's why today it is not a difficult task to find out the culprits who are doing the laundering activities, money laundering activities. Accounts dealers of jewelry, gold, silver, bullion, diamond, and precious metals, stones shall be categorized as a high risk customer. 100%, no doubt at all. Monitoring and review customer risk categorization. Head of the branch, particularly high risk customer. Every 6 months, we have to verify the customer transaction generated report, and one software system is also there. And the 15th May and 15th November, high risk customers personally to be monitored by the branch heads. If at all any lacuna is there, they brought to the notice of the higher authorities. If they did any casual approach, they are also punishable under PMLA Act 2002. So monitoring and review of customer risk categorization. Bank branches shall carry out the review of risk categorization of customer periodicity not less than once in 6 months. As on 15th May and 15th November. Every year. Foreign remittances shall not be allowed to credit to the small savings bank accounts. Through SWIFT, Society for Worldwide Interbank Telecommunication, from another country to this country, particularly if it is small, then system will stop. Then automatically the branch manager has to, why that he is a Jan Dhan Yojana account. That too maximum amount is 50,000. Why wire transactions are came? Once the Jan Dhan account is there, earlier people are habituated to do small amount to some of the, particularly during the political this one, particularly the elections period. This is also carefully to be monitored by the system. Foreign remittances shall not be allowed to credit to the small savings deposits. Jan Dhan Yojana maximum amount is 50,000 balance, unless identity of the customer is fully established through the production of an officially valid document. Why you have got this amount? What is the reason? Can I have the particularly the official valid documents? Once the valid documents are satisfied, then the bank officials will allow that inward remittance and it will be credited to the concerned account. The non-face-to-face accounts. With the introduction of phone, electronic banking, increasingly accounts are being opened by the banks for customers without the need of the customer to visit the bank branches. That's why online accounts opening is also high risk. Not only that one, e-marketing companies are also high risk. Today, the e-marketing, lot of malpractices are happening. Unethical amount is also originating. Decision to open account, particularly politically exposed person. All branches are not authorized to open the accounts. Particularly if at all he is an MLA or MP or particularly the village president or a municipal councillor or municipal chairman, politically parties people, if at all they are politically exposed, the category of the branch manager is senior management grade 4 or chief manager grade 0 branches only it will be open, not at all branches. These are the Reserve Bank of India guidelines. Decision to open the PEP as well as the decision to continue the business relation in the event of an existing customer or relatives of the existing customer subsequently political. Earlier he is non-political, now he become political, means definitely he will turn from medium or low risk to high risk customer. And taken branch head headed by the scale 4, that is senior management grade or chief manager grade and above. Even we're opening accounts or transaction monitoring, not only for public, even internal staff also, bank staff also, hiring of employees. Whenever the banks are hiring the people and they enter into the banking system, they have to find out the suspicious transaction. And they should not do the suspicious transaction. For that, the verification by the superintendent of police, whenever the staff is reported for bank, before they confirm that particular, we will send the various places where he is earlier settled or stayed, and we will get the information. Then only the confirmation will be given. KYC norms, anti-money laundering standards, combat of the financial transaction measures have been the prescribed to ensure the criminals are not allowed to misuse the banking channels. Bank put in place of adequate screening and mechanism as an integral part of the personnel recruitment or hiring process. Monthly once, the branch manager of the branch, they have to verify the all staff accounts. And they have to send one certificate to their controlling authority that I have verified that there is no suspicious transactions in the staff accounts. Okay, if at all he is open in other account, that is a different issue, but suspicious transaction. To avoid the frauds, particularly the bank staff and various still, even though this type of systems are there, still some frauds are happening, some misappropriation of things are unethical manner is also happening. But if at all these systems are not there, you imagine the how much money laundering transactions will happen. Now coming to, because a bank is the source and all transactions are routed through today the central bank digital currency. Central bank digital, in a phased manner, Government of India is thinking about, or the International Monetary Fund, IMF, instructed all the member countries initiate the central bank digital currency, CBDC. That is already implemented 1st November for wholesale transaction, December 1st retail transactions. Now it was rolled out across the country, and the government, Reserve Bank of India is thinking how to reduce the physical currency. And once the CBDC is there, all are fine. The wire transactions only, no cash, nothing. Cashless economy, the main aim of the International Monetary Fund to their member countries, only the wire transactions, cashless economy. Once that is there, if at all I am transferring my currency, virtual currency, that is called CBDC, to another person, it will be recorded in the Central Bank of India register, and for the, if at all that note is transferred from one person to another person, 100 persons also, it is easily to be identified. Thereby, it is money laundering activities. To curb the money laundering activities, the Government of India is also initiated the Central Bank Digital Currency. Now coming to Financial Intelligence Unit, that is FIUIND, Financial Intelligence Unit, India. This FIUIND, okay, banks are getting suspicious transaction. Even professionals, some of the professions who are practicing, they know the suspicious transaction. They have to intimate to FIUIND. Later on, if at all enforcement directly catch hold of that company, and who is the professional provide the service to that particular company? Why he is not informed the suspicious transaction to FIUIND like banks? Today banks are also, whatever the customers are there, all customers suspicious transaction, daily it is goes to the FIUIND. Because we are using the technology, because on account of a number of transactions. But here, being a professional, particularly the practicing professions, whatever the transactions, if you know the transactions, but here some problem is there. If at all you are informing, the client may not happy. If at all you are not informed, then you may not be happy in future. So client is not happy if at all you are informed. If at all you are not informed, later on you may not be happy because on account of enforcement directory that they will take the action, etc. etc. Now coming to FIU-IND. The FIU-IND Financial Intelligence Unit. The mission is to provide a quality financial intelligence for safeguarding the financial system of the country from the abuses of money laundering, terrorism financing, and other economic offenses. That is the main mission of the FIU-IND. FIU-IND is under the Minister of Finance. Minister of Finance. We will dive the huge amount of databases there, computer systems are there, data warehousing is there, data mining is there, computer specialists are there. If you see the organization structure of FIU-IND, particularly from the capital market transaction, from the financial system, from the registration of particularly the register of how the assets are registered, all wire transaction from other country to our country, how many foreign inward currency is there, how the from our country to other country, the outward remittances are there. All our database is maintained by none other than FIU-IND. Financial intelligence. Today, to get the data is not the problem. If at all money laundering transactions are happening, it is a very easy with the help of this one. With the help of this FIU-IND. Day by day, the FIU-IND is strengthened. Now I will discuss about the FIU-IND. Financial Intelligence Unit India was set up by the Government of India while the OM dated 18th November 2004. At that time, as per International Monetary Fund guidelines, they have opened. Now it is a full swing activity. Today it is a full swing activity. As a central national agency responsible for, it is a central national agency to receive the data, processing the data, analyzing the data, disseminating the data of suspect financial transactions. The main role of is receive the data from the financial system or the capital market or money market or forex market, whatever the commodities market, all data reports are gathered by FIU-IND on daily basis. And whatever the inward and outward remittances, what is the registrations that are happening? Asset, I am purchasing asset, I am purchasing one house or land. All the registration data is also captured by FIU-IND. And processing the data, analyzing the data, and disseminating the data to the particularly to whom they are the money laundering transaction, they will inform to the regulators. They will inform to the regulators. So FIU-IND is responsible for coordinating and strengthening the efforts of the national and international intelligence, investigating, enforcement directorate. Suppose the data is particularly if any suspicious transaction on any corporate is there, it will pass on the information to the enforcement directorate with the permission of the concerned regulator, whether it is a MCA or RBI or Insurance Regulatory Development Authority of India, whatever the regulators are there. So the national and international intelligence investigation enforcement agencies and perusing the global efforts against the money laundering and financing terrorism. The main objective is to collect the data, processing the data, and analyzing the data, and disseminating the data to the concerned people to take action against money laundering activities as well as terrorist financing groups. FIO-IND is an independent body reporting directly under Economic Intelligence Council. It is an independent organization directly reporting to the Economic Intelligence, headed by the Minister of Finance. And the main function of FIO-IND is receive cash or suspicious transaction. Cash transaction, suspicious transaction, daily, all banking system branches under one server, that is core banking system. The core banking system consolidate all the branches and send the CTR report, STR report to the FIO-IND. Analyze them, appropriate, disseminate valuable financial information to intelligence or enforcement agencies like EDs, Enforcement Directorate, and the regulatory authorities also. They will defer. That is the guidelines. That is the Government of India organization. Functions of FIO-IND is collection of information. First, they will collect the information from the banking system, from the insurance system, from the capital market, from the money market, from the foreign transaction market or inward and outward market, from the registration departments, what type of registrations are happening, how much the sale and purchase of the asset, whatever the wire transaction between the countries, all the central reception point. It is a central database server. Through the IT software, even my transaction report can also be accessed by the FIO-IND. One is a cash transaction report, CTR. Second one is a non-profit organization report. Whatever the NGOs are there, NGOs report will also be called NTRs, non-profit organization reports. That is also preserved by the FIO-IND. And the cross-border wire transaction report, CBWTRs, and the reports of a purchase or sale of immovable property, land or building or immovable property, whatever the reports, that is suspicious transaction from various reporting entities like banks, financial institutions, etc. It is a central database. All transactions are reported, and they will small below 1 crore. They don't take, or sometimes small amount 10 lakhs. If that transaction is more than 1 crore, that will also be captured. Some of the people they are thinking that they are intelligent. No, instead of 1 crore, you split into 5 lakhs, 5 lakhs 20. 5 lakhs 20 means the 20 will the 5 into 20 1 crore or 21 more than 1 crore. That is also goes to the FIO-IND. Analysis of information. Analyze the received information by FIO-IND, whatever the reports they are receiving from the different entities. Uncover pattern of transactions, suggested suspicion of money laundering and related crimes. Definitely they will identify whether it is a genuine transaction or not a genuine transaction, or whether it is a terrorist finance or money laundering transaction. All are, it is a very easy for FIO. That much system is there, that much database is there, that much knowledgeable people also there, particularly the data analysis or data mining, etc. Sharing of information. Whatever the suspicious transactions are there, they will inform to share that information with the national intelligence and the law enforcement agencies, national regulatory authorities, foreign financial intelligence units. They will disseminate this information. So this is sharing of information. They will don't keep that information with them. Whatever the suspicious transaction, whether it is an individual or NGO or trust or societies or whatever the particular corporates, all information will be provided to the appropriate regulatory authority. act as a central repository, establish and maintain the national database on the basis of reports received from reporting entities like banks or financial entities. Coordination. They coordinate the strength in the collection and sharing the financial intelligence through an effective national, regional, global network. They will collect the information from particularly the state governments also, but from their surplus, whether it is a national or regional or global network is also there to combat the money laundering and related claims. The main objective is to combat the money laundering activities and related claims. That is the main objective or mission of that FIUIND. Research analysis. Number of research analysis is also there. Monitor and identify the strategic key areas in the money laundering trends, how it is happening. Topologies network. This amount goes to this network. This amount goes to this network. That is easy for them with the help of a research analysis. Only the data is available and they will how the money is moving, the irregular, unaccounted or the bad money or all they will find out. It is very easy. Topologies network from this unit from associate to subsidiary, subsidiary to associate, associate to this one. Even though some companies they are opening a number of subsidiaries are associated and transfer the fund from one account to another account, like a mesh transfers. That is also easy for them to identify. The developments. Now, another entity is also there. That is the Financial Action Task Force. So, FIUIND, Financial Intelligence Unit. The next one is the Financial Action Task Force. These two are they are contributed their data to others and they will catch hold of the people, particularly within the country. FIUIND, cross-border from country to another country, whatever the transactions are happening, particularly imports or exports or shell companies doing money laundering activities from one country to another country by showing exports revenue or imports like that. That is very easy with the help of a Financial Action Task Force. FATF, that is a Financial Action Task Force. All as per International Monetary Fund, FATF, Financial Action, some countries are members of this country. These members, they will follow the Prevention of Money Laundering Act or KYC, Know Your Customer, or Anti-Money Laundering Activities or Prevention of Money Laundering Transactions. Other than these members, other than these countries, they are not following the prevention of money. Dangerous countries. They are dangerous. Those who are in the FATF, they are the safest countries. And some regulation is there or some prevention of money laundering transactions are there. Other than these members are dangerous countries. Now I will discuss about FATF. FATF. What is FATF? Financial Action Task Force leads a global action to tackle money laundering and deterrence the proliferation of financing. So I told earlier within the country. Now I am talking about country to country. That is a cross-border transactions. For that, FATF is there. FATF research how money laundering and terrorism fund promotes global standards, mitigate the risk and access to whether the countries are taking effective action or not. Whoever the members are there in FATF, they have to follow them, particularly money laundering guidelines issued by them. If at all they are not follow the guidelines, they will delete that country from their group also. So some of the African countries, dangerous, they don't follow the money laundering transaction. the black money and all kachada is there in that particular countries. Terrorism finance is there. No, the money laundering transactions are there. Some countries. I will list out the countries also at a later stage. Method and trends. FATF continuously monitors. They will continuously monitor how criminals and terrorists raise, use, move funds. How they are raising, how they are transferring the funds from one account to another account. As the countries to put effective measures to disrupt illicit financial flows, criminals must find alternative ways to launder their dirty money. Even though these standards are there, FATF is there, FIIND is there, PMLA Act is there, still the criminals are searching for other alternatives. But over a period of time, they are unable to do. That is why even cross-border currencies are also, you need not to purchase foreign currency. Even in India also, Indian currency is accepted by other currency. The transfer of funds from INR to other country. Now some cross-border transactions are also happening, particularly the Singapore and the Gulf countries, etc., etc. FATF regularly publishes reports, raise awareness about the latest money laundering. If you see the FATF how the money launderings are happening, they will publish the case studies. They will publish the money launderers, how they are channelizing the funds from one account to another account. And terrorist finance, proliferation of financing techniques, what techniques they are adopting. All these things across the world, what is happening, that will be published by the FATF, so that countries and the private sector can take necessary steps to mitigate these risks. So if the corporates are thinking and they are reading this FATF journal or publishers, whatever the journal is there, if they read, then this type of risk can be averted. Setting standards. Internationally, they will set the standards for country-wise. FATF requires to coordinate a global response to the prevent organized crime, corruption, and terrorism. That's why from time to time, they will inform to the central government of the countries and how to mitigate this particular money laundering transaction and terrorism finance. They help authorities to go for money criminals, dealing with illegal drugs, human trafficking, and other crimes, etc., etc. So they help the authorities go after the money of criminals, dealing with illegal drugs, human trafficking, and other crimes also. FATF is also works to stop funding the weapons of the mass destruction. They're also providing that stops the funding for weapons for mass destruction. They will set the standards and that the standards are disseminated to the member countries. FATF contributes to strengthen the global standards to address the new risks. What are the new risks in the money laundering or terrorism finance is happening, and the regulations of virtual assets which are spread. The cryptocurrency gain popularity. Today, the cryptocurrency is a dangerous one. Even though the government sometimes they are silent and sometimes they are issuing some guidelines, but cryptocurrency is also dangerous to the economies. It is unorganized and not regulated and not accounted for a tax purpose, and the value is also appreciating. So many things are there, and even in G20 also they are discussing sometime on the cryptocurrencies also. And FATF monitors the country to ensure they implement the FATF standards fully and effectively. If at all India is a member in FATF, they have to follow these standards as laid down by the FATF in their country, particularly to prevent the money laundering transactions or terrorist finance. In total, more than 200 countries and jurisdictions have committed to implement FATF standards. and they are assessed with the help of 9 FATF associated member organizations. With the help of a number of 9 zones, 200 countries, they are providing the guidelines. And global partners, International Monetary Fund and World Bank. And from time to time, these FATF will disseminate that information to the member countries and to combat the money laundering transactions or terrorist finance. FATF wants countries to account do not comply with the FATF standards. Holds countries to account that do not comply with the FATF. If at all any country is not following, they will remove. Recently, the Russia also removed. They are not following the money laundering standards as defined by the FATF. Whatever the AML is there, anti-money laundering policy, also or FATF, the prevention of money laundering activities, all standards are defined by none other than FATF in the world. Who are the members of the FATF? They have to follow those guidelines. Otherwise, the membership will be cancelled. If a country repeatedly fails to implement FATF standards, then they can be named as a jurisdiction under increased monitoring or high risk jurisdiction. They will define. These are high risk jurisdiction. Whenever you are going to invest or whenever the funds are transferred to the other countries, you have to be careful. These are often extremely called gray and blacklist. Those who are not implemented or not a member of FATF, those are called the gray or blacklist. This one. To achieve the global implementation of FATF recommendation, FATF relies on the strong global network and that is called FATF style regional bodies in addition to own 39 members. FATF is having 39 members and other than that also some regional bodies are there. And automatically whatever the standards are defined by the FATF, 200 countries they are implemented. 9 FATF zonal regional bodies have an essential role to promote the effective implementation of FATF recommendations by the membership and providing expertise input of FATF policy making. Today, whatever the prevention of money laundering or anti-money laundering that are followed by the banks or the country, all are the standards defined by the FATF only. And India is also one of the member in FATF. That's why we have to follow. Otherwise, our country is not following high risk country, they will declare. Once high risk countries are there, funding is a big problem, particularly from the World Bank or IMF, etc. Over 200 jurisdictions around the world have committed FATF requirements through the global network. 9 FATF regional bodies or memberships are there. Since 2007, FATF International Cooperation reviewed the group and received 125 countries and publicly identified 98 countries. These are the FATF role. If you see the particularly out of these 98, 72 since made necessary reforms to address the out of 98, 72 are completed necessary address the AML and CFT weaknesses and removed from those the process. These are the countries. Argentina is there, Australia, Austria, Belgium, Brazil, Canada, China, Denmark, European Commission, Finland, France, Germany, Greece, Gulf Cooperation Council, Hong Kong, China, Iceland, and India is also one of the members in FATF. That's why we are implemented the Prevention of Money Laundering Act 2002, and whenever they are informing us the standards, particularly the recent changes, 2023 is also based on the FATF guidelines also, and Ireland is also one of the country. Israel, Italy, Japan, Korea, Luxembourg, and Malaysia, Mexico, Netherlands, and New Zealand, Norway, Portugal, Russian Federation, South Arabia, Singapore, and South Africa, Spain. I put the 30 Russian Federation as a star mark, means they have removed from this association. Why? Because they are not following the standards as defined by the FATF. If India is also not following the prevention of not implemented in total the prevention of money laundering, then the name the India is also deleted from the membership of FATF. And Sweden, Switzerland, Turkey, and the United Kingdom and the United States. FATF was suspended the membership of Russian Federation on 24th of February 2023. During this year, they are not following the standards as defined to curb the money laundering transactions and particularly anti-money laundering or financial issue, whatever the standards from time to time they developed that they are not implemented. That's why this problem is arise. Now summary, because today we will complete the only series one, the two introduction part over a period of time, particularly what is the suspicious transactions, how it is happening, and what type of how the clients, particularly the customers or clients, how they are doing the money laundering transactions, how to stop that one, all these things. 2 and 3 also I will discuss. If required, I will take one more also to give a broad view about the prevention of money laundering activities. Why? Because if at all we are doing our profession in a casual manner or not following the guidelines, then we will also in the trap. The enforcement directive, they will punish those who are not following the guidelines. So prevention of money laundering was enacted to fight against the criminal offense of legalizing the income profits from illegal source. The Prevention of Money Laundering Act 2002 enables the government or public authority to confiscate the property earned from illegal gain process. In a simple words, money laundering means converting illegal earned money into legitimate money. So that should not happen. Whatever the legitimate money and legal money is there, that is always good. Otherwise, some of the people they are facing the enforcement directorate, whatever punishments are there, that punishments. So as per the data, particularly I have given the data also to you. In that data, year-on-year basis, the Prevention of Money Laundering Act, the transactions are increasing. All transactions have to be enrouted through the financial system or the capital market or the money market or the foreign exchange market or the commodities market. So whatever the illegal money is there, the illegal money not to be invited, not to be routed. So once it is routed, the consequences are to be faced by the people who are doing that type of transactions. So once you know the total Prevention of Money Laundering Act, then we are in safe. Otherwise, we will be in the risk. So this is a small introductory reference. That's why most of the people they may not aware whether banks are classifying the customers under low, medium, high risk, and the banks are also not. The banks are also sending the suspicious transaction report on daily basis to the FIU-IND. And most of the people within domestic, the FIU-IND, FATF is the cross-border, all these things are there. Anyhow, in a 3 series, I will give a full information about the Prevention of Money Laundering Act, how the punishments are happening, what type of illegal transactions are happening, all these things I will discuss. And thank you very much and good night to all. Madam? Hello? Hello? Hello?
Yes, sir. She will be coming, right?
Tell me. So today it is over, and next week, my personal opinion, next week same time we will start one more series. After that, one more series, and whatever the case studies and other things are also there, I will discuss appropriately at an appropriate place. But being a professional, better to understand the total PML. Otherwise, number of people are involved in this PMLA Act, particularly the enforcement directive is every day. If you read the newspapers, some of the people across the country, they are involved in one way or other in the PMLA activities. So thank you very much, sir, and good night to all.
Sir,
Ah,
thank you for the lecture, sir.
ah.
That was an excellent lecture and people have appreciated, and we are having lots of comments and we are having lots of questions. So, sir, can I ask you some questions? Sir?
Yes, sir, some questions you can ask, no problem.
Okay, sir. So, one question we have received from Mr. D.N. Banerjee. How is it relevance of PML in cost audit assignment?
That I will discuss later on, because now today is only the introductory part and the classification of customers. Because being a professional also, particularly practicing CMS, those who are practicing cost audits and others, there are also some suspicious transactions. Definitely it will happen. All these things in a phased manner, I will inform to all the people. Okay. This is only today is only the introductory level, and next at the end definitely I will touch the cost audit or whatever the relevant areas are to be focused by the professionals. I will discuss that one also.
Okay, sir. So Mr. Srinivasan has asked a question: why blind persons are categorized as medium risk customers?
This is not a bank's own decision. This is a regulatory direction. Second one, it is not a regulated direction. If it is the standards are given by the FATF only. FATF to regulator, and the FATF to Government of India to regulator, regulator to bank. It is not a bank on its own, based on the experience, based on their particular information across the globe. They find out that these people also comes under medium, like that they define. That is the standard. That is the standard based on some incidents were happened and a lot of research was happened. That's why they categorized as a medium risk.
Okay, sir. Mr. Farooq Puri has asked a question. Mutual fund savings are made over several years by salaried persons. Retired persons may redeem and purchase mutual funds of high value. Will these be covered under suspicious transactions?
High value transactions are to be covered under suspicious transaction. If at all it is a genuine transaction, no problem. If at all it is an illegal transaction, definitely the FIO-IND will catch hold of the particular person.
All right. So Mr. Subhash Chandra Dora has asked a question. What are the risks for a professional in providing services to clients to finance their projects or businesses? What precautions shall be taken?
That's why I told about in due course, next series 2 or series 3, I will cover those also.
All right, sir. So Mr. Asaki Raja Perumal has asked, sir, at what stage money laundering is difficult to detect?
No. Money laundering activities, it is not difficult now. In the manual transaction, it is difficult. Now the technology development is there and so many tools are also available. Now it is not a difficult one. Even I told about one small issue I told, CBDC I told, central bank digital currency. They are replacing the physical currency into virtual currency. Virtual currency also the note number is there. If at all I am transferred the note from me to other or other to other, all our tracked system is available in the Reserve Bank of India registry. Registry means that is their server. It is available. If this suppose my 2000 the 500 note is transferred to X, X to Y or Y to Z, all are tracked. If that is there, that system is there, cash transactions are easily be identified whether it is a suspicious transaction or genuine transaction.
All right, sir. FCMA Umas Suresh has asked this question. As a cost accountant while auditing corporates, what are your recommended ways to go the extra mile to identify illegal transactions or sources or outflows of the client?
In the series 3, I am exclusively giving what type of suspicious transaction. A big list is there. I will discuss each and every point suspicious transaction that are happening in the corporates. Then definitely they will know what is a suspicious. Whenever they are doing that audit or a particularly cost audit or other internal audit, then they can easily find out. Particularly this CMS are also earlier 7 days is there. Now every 15 days they have to inform. Earlier 15 days is there. Now they was condensed to 7 days like that. I will check up that one, and they have to inform to the FIU IND on regular manner. Once the banks are informing the suspicious transaction on daily basis to FIU IND in due course. Particularly the professionals are also to be informed to the FIU IND on regular basis. That is possible also. That is not an impossible thing. And they are also doing some research in this area. How? Because the professionals are doing various types of services to their clients. And they are the first, they are having the first-hand information about the suspicious transactions of the client. Banks means once the transaction is routed through the banking system, we will find out. But the first information known to the professionals who are providing various service, whether it is a cost audit or internal audit, whatever the type of this one. Definitely in the third series, I will exclusively deal with the particular suspicious transactions, STRs.
All right, so last question. CME Alokesh Datta has asked whether UPI fraud or AEPS fraud falls under PMLA Act.
Yes, yes, that is also covered under PMLA. Whatever the irregular transactions are there, definitely different acts are there. Under different acts, directly it is linked to the PMLA. That is also covered. Whatever the wire transactions are there. Even online marketing, some of the people they are doing online marketing, but virtually the physical appearance of the business organization is not there. How they are handling that process, particularly online payments, all these things are also covered under the PMLA Act.
Thank you, sir, for the detailed deliberation and for the excellent PPT, sir. Now I would like to request CMA Dibendo Roy, Additional Director and Head of the Department, to give the vote of thanks.
Okay.
Thank you, Payal. I think we had an excellent session from our learned speaker, CMA Dr. P. Sivaram Prasad. And we today actually held the first series of this prevention of money laundering, and we'll be having 2 more sessions next week and day after. And I thank everybody who had a patient hearing today. We had some technical snags. We are very sorry for that in the initial part. But still, we thank our President, sir, and our Vice President, sir, and our Chairman, Chittaranjan Chattopadhyay, sir, for motivating us to organize this type of webinars every week for the growth and development of the knowledge know-how of our members and others and students also. We also thank our Bagchi sir, Sri Arup Shankar Bagchi, who is Senior Director and Secretary of the BFSI Board, for always helping us or motivating us to organize such webinars. We thank our team members comprising of CMA Dr. Aditi Dasgupta, Sri Bhavesh Kumar Sinha, Ms. Payal Banerjee, Ms. Soma Chakravarti, Ms. Indrakshi Bhattacharya, and Sri Shantanu Pradhan for their excellent support. In spite of being a weekend, they have supported each other to organize this webinar. We thank our IT department to organize this webinar in an online forum. And we also hope that this webinar will be hosted in our YouTube channel so that you can understand or know this webinar in a much more better way. Whenever you feel like it would be uploaded in our YouTube channel for the growth and development of our members. And with that, we request all to join our second series, which would be hosted next week on 30th of September. For this series, we thank everybody concerning our Dr. Sivarama Prasad and others who are in the backside. Also, our those who are helping us, our CEP department, for helping us with this webinar. Okay, and thank you, sir, and good evening.
Thank you, sir. Thank you very much. Good night, sir. Good night.
Good night.
Thank you, sir.